Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today is July 28th, 2019, and this is the weekend market review where we take a look at some of the top and worst performing ETFs in the market and get a better sense of what's taking place and where to best invest. So, starting with our walkthrough of the various ETFs for the year to date, you see technology, NASDAQ, consumer discretionary. They've done quite well so far this year. Lowest are the financials and energy and healthcare. So from a momentum standpoint, technology and NASDAQ, that's a great place to look at. From a contrarian perspective, healthcare, energy, and financials are a good place to look at for our potential opportunities. From country ETFs, Greece is outperforming considerably this year. Russia, Australia, Canada, and the Global 100, followed by France. On the bottom end of this, we've got the Euro, India, Mexico, and the yen and the U.S. dollar. So some currency ETFs and some country ETFs. Spain here trickled here at the bottom. Uh, in terms of commodities, nickel and water, palladium and oil are the best performing ETFs. And that's frankly surprising with oil because you'll see here between XES, PSCE, XOP, and so on, they're some of the worst performing ETFs and perhaps why we like them a little bit. Here's agribusiness and timber. They've done really well. On the bottom rung of this is natural gas, cotton, wheat, coffee. So some of these commodities have just not done well. So here might be some opportunities for contrarian plays. From a bond perspective, emerging bonds have done exceptionally well so far, up over 11%, followed by high yield and 20-year long-term treasuries. The short-term treasuries have done okay, but yeah, high yield has done really well, and that's frankly a sign that the markets have just been strong and the underlying strength is still there, very much there. So starting with some top performing names, here's the semiconductors. The semiconductors here are breaking up to all-time highs, as you see, breaking above the 90 on the XSD, and we're on the verge of breaking above the 69 level. We closed the week above the 69 level, but if we confirm this with a follow through this week, you're going to see some really strong performance in the semiconductors. Gold, as in the GDX, the majors, gold is well on its way to testing the 2016 highs at around 31 when the GDX gold miners. They had a pullback here, a bit of a shooting star, so we might have maybe a week or two of pullback in the miners. But I think in the next month or so, we'll be retesting that 31 and a half zone, and I think at some point we'll be breaking out thereafter. Here are the junior miners, and you see whereas the majors are pretty close to their 2016 highs, the miners the juniors are nowhere near those highs. So there's some considerable upside here with the miners, and we're still in overbought territory, which is where some of the best gains do occur. But if we break below that 69 level, right around there, we might see a pullback, perhaps as low as 34. I don't think we're going to get there, but that's definitely a possibility. But I think, again, in the long run, over the next 1 to 2 months, we're going to see a high of 50 at a minimum. And so there's some significant upside. Here's the equal weight technology ETF, RYT, and you see that's breaking out as well to all-time highs. Even though momentum is slightly negative diverging, it has broken this downtrend here, and it looks like it wants to move higher. So if that breaks the 69 level in the coming days or perhaps weeks, there's going to be some very nice upside ahead. You see you've got the MACD still firmly above zero and curling in the positive trajectory. So the markets just overall are looking very strong right now. Aerospace and defense, another sector that's doing quite well. You've got the 13 over the 26, the moving average crossover. That's very bullish, and it just once it broke out over here from its all-time highs, frankly, it's been really strong and it's not looking back. It's now firmly above the 70 area of RSI, and now I think it's going to be setting up for really nice moves over the coming couple weeks. Here's technology, North American technology ETF, And this one is also on the verge of breaking out of this downtrend here, and it could see some very nice new highs in the weeks ahead. So technology, software, semiconductors, all looking really good right now and very strong. No sign of any weakness really here. Small cap energy ETF, on the other hand, is building some momentum, but it needs to hold this downtrend here, or uptrend rather. It's hovering around that $8 range. If it can hold this area and break out above this trend line, that would be a very bullish indicator, and that's when we would want to go long that particular sector. However, if we break lower here, then this trend line uptrend breaks, then we can see new lows in the small cap oil sector. Here's the oil, gas, and equipment services, another one of the bottom dwellers on the ETF watch list. And again, notice this uptrend here. That's very bullish, but it needs to hold. It needs to hold right now. It's struggling to break above that 38 level, and again, it's hovering around that 8 level. If it can hold this area, it's going to have some really nice upside. Certainly has a chance to run towards that 12, and then potentially break out thereafter. But right now, it needs to hold this area, and it's just kind of a waiting game. Here's the oil and gas exploration ETF XOP. And this one's struggling to hold that 24 area, and if it can't hold it, then it's going to be on its way to 21. If it can hold it, then it's going to make a run towards 28, followed by 32, possibly as high as 40. But I notice here that it's slightly breaking this uptrend here that it's been building over the last basically since 2019. And if that breaks, then 21 is well on its way. Small cap India ETF. So emerging markets have done really well this year. India's large caps have done okay, but small caps have just been breaking down. I'd be curious to find out what the fundamentals behind that is. But notice we broke down of a triple bottom right now, and we broke down from this uptrend that it was building, similar to the oil plays that we just looked at. Similar type of uptrend, and then we broke it, and sure enough, it was a breakdown here. However, I will point out there is a slight positive divergence, so new lows, but RSI has not made new lows. So if we can hold this 31 area right here, then this could be a nice, potentially fake breakdown rally here. So I'm watching this one closely. Here's the oil services ETF. This one's hovering around that 13 level, and again, hovering above that uptrend. And if it can hold this 38 level of RSI, that can be a sign that this might make a move towards 19, possibly as high as 29. So there's some very nice upside if it can hold these levels at 13 over the coming weeks. So I'm watching those very closely. Here's one country that has been beat down over the last many years and is very closely tied to oil. So I'm watching this positive divergence that's being created even as we make new lows. Now, we made new lows, but we broke out here in January of 2019, had a nice rally, and we've back tested it so far successfully. If we can hold these levels at 1350, then potentially there can be some very nice upside in the coming months ahead. But right now, there's nothing to see. If it breaks 1350, that means it's moving lower. If it breaks above this bullish wedge back test, then I think we can see moves towards 18, 19, possibly 20 this year. Here's uranium, and obviously I've been tracking uranium for quite a while. A lot of my viewers are very interested in this ETF, and we own some names in the sector. This has been very poor showing over the last couple of weeks. It's 1, 2, 3, 4 weeks in a row, and I feel like this last week has been a washout week. So it's going to be interesting to see if this downtrend can hold and find support there, or whether this momentum breakdown is legitimate, and we see new lows in uranium, possibly going to as low as 1050 on the URA. And finally, medical devices. This one should be over here. This is actually one of the better performing ETFs in the marketplace. That's breaking to new highs right now as well. So it's a great risk reward entry with It would have been great to buy at about 230, 233, but nonetheless, you can buy it with a stop loss right below the 13-week EMA around 236, and I think you'll be just fine riding this momentum wave to the upside. That's it, guys. Would love to hear your thoughts. Feel free to send me your feedback on YouTube, Twitter, or StockTwits. Dave at Moniology is my email. And if you like what you see, stay tuned for our premium service that'll be launching in the coming days and weeks. We're opening up the first 100 slots to special pricing at $37 a month. So if you want to be a part of this, we would love to have you on board. After the first 100 subscribers, we're going to raise those prices to $50 a month. So we'll look forward to hearing from you. And we've got a couple spots left and look forward to having you part of my community. Have a great rest of your week.